Today, Goldman Sachs and BNY team up on tokenized money market funds. Crypto custodian BitGo confidentially files to go public. And the CEO of OKX U.S. breaks down what regulatory advancements here in the States means for the crypto exchange. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies in the red this morning. By noon Eastern, Bitcoin slipped around 0.25% to $118,600. Ether fell nearly 2% back to the $3,600 level, and Solana dropped 4.5% to $192. Okay, let's talk about the top stories. Another crypto firm files to go public in the U.S. This time, it's BitGo. The crypto custodian confidentially filed IPO documents to the SEC following crypto ETF issuer Grayscale, which did the same last week. BitGo said the number of offered shares and price range are yet to be determined. The move comes amid regulatory advancements for crypto in the U.S. after President Trump last week signed the Genius Act into law, regulating stablecoins. The Peter Thiel-backed crypto exchange Bullish also filed to IPO last week. It, of course, has been a big year for new crypto offerings, kickstarted by stablecoin issuer Circle's blockbuster IPO last month. Next, Goldman Sachs and the Bank of New York Mellon are teaming up to offer institutional investors access to tokenized money market funds. BNY is the world's largest custody bank. It'll employ blockchain technology developed by Goldman to record customers' ownership of select money market funds. The idea is to have real-time settlement, 24/7 market access, and more. BNY's global head of liquidity, financing, and collateral said the bank is, quote, proud to be at the forefront of this first-of-its-kind initiative. Goldman's global head of digital assets said the technology could enable the bank to unlock the token's utility as a form of collateral and open up more seamless transferability in the future. The initiative includes participation from big names on Wall Street, including BlackRock and Fidelity. Keycore joined CNBC's Squawk on the Street, where he reacted to the passage of the Genius Act, saying stablecoins have a lot of promise. He was asked where he stands on potentially allowing clients to have the option to get in on stablecoins and crypto, especially as other banks announce partnerships with crypto firms.
When you think about stablecoin, there's really a few things. There's the institutional piece, which will be the equivalent like prime brokerage. That will be dominated by a single handful of international banks, the huge volume, relatively narrow margins. That's not really an opportunity or a challenge for us. The next is as a storer of value. And clearly, to the extent, Sarah, that our clients want it and they want to hold it in their wallets, we will accommodate that. And so we'll be sure to do that. Then there's the sort of discussion around, is it going to cannibalize deposits at banks? I actually think that's a fair, I think it's a threat, but I don't think it's an immediate threat. And I think the industry will respond. I mean, whether it's with tokenized deposits, which I think you'll see banks like Key do, and you may well see, I don't envision Key issuing a coin per se, but I could see us as part of a consortium of banks that issues a coin. And then I think the two best applications are really international payments. Right now, international payments are sort of this Byzantine approach of, all these correspondent banks. It takes a long time. There's a lot of friction. I think stable coins could be a really good solution for our clients. It could be faster, cheaper, better. And then last is just programmable payments, which every bank needs to do, whether it's escrows or other programmable payments. So I'm actually, particularly on those last two applications, I'm pretty enthusiastic about it.
All right, for our main story, Roshan Robert, the CEO of crypto exchange OKX U.S., sat down with Crypto World's Talia Kaplan to discuss the company's U.S. expansion and developments for crypto on the regulatory front.
OKX originated in China more than a decade ago. You have an international presence, but then back in April, you announced your U.S. expansion. So now that it has been about 3 months since you launched in the U.S., how's it going so far?
It's going wonderfully well. We launched the exchange in the U.S. in April, and we've been rolling out products and services suited for both institutional as well as retail customers since then. We also recently made a couple of announcements, announcing our partnership with Circle and the USDC network, as well as our entry into as a co-partner in USDG or the Global Dollar Network. Both very consequential and important announcements.
And we're going to talk more about those announcements in just a bit. But first, I'm curious to know why specifically now did you announce your U.S. expansion? I want to focus on the timing because obviously we're in this backdrop of a more crypto-friendly administration and SEC that has been dropping lawsuits against crypto firms like Coinbase, another crypto exchange. So did that have anything to do with your decision to expand in the U.S. now? Also, we're seeing regulatory advancements here in the U.S. for crypto. So was that a factor at all as well?
That's a great question. So, we've been looking to build out in the U.S. for a long time, but we were waiting for the right moment in time when we have the infrastructure in place to ensure that we have a compliant and a well risk managed enterprise that can launch here in the U.S. So we've been building that over the past few years. If you go back, like you rightly said, we've been building this architecture around public blockchains for over a decade. We have the technology in place that binds over 100 blockchains together and introduces products and services for customers around the world. Over the last few years, what we've done is we've taken that infrastructure and we've placed that on the 5 foundational pillars of finance. So we built out compliance. We have a strong compliance program that with over 500 people manning compliant functions around the world. We built out a strong risk management program that cuts across all applicable risks of the ecosystem. Client money is very important, and we've seen that from the last financial crisis. So we have instilled proper governance around all aspects of client money, including segregation, financial reporting, etc. All of this public blockchain finance is on the internet. So having proper cybersecurity frameworks is important, and we've painstakingly built that out as well. And last but not the least, when you talk about foundational pillars, having proper sales practices is also an important factor. And so we've built the proper supervisory framework around sales practices, both for retail as well as for institutional customers.
So what are you focused on now specifically with OKX U.S.? What is your goal with this expansion?
Right now, for the short term, we are building out our spot exchange. There's an ever-expanding market for crypto products, crypto spot products. As we stabilize the spot market here in the U.S., we also want to look at the other opportunity sets. Another major opportunity set here in the U.S. would be the derivatives market. So over time, we want to understand how we can get into that market. RWAs, real-world assets on-chain. Right now, I think we have around 25 billion of real-world assets on-chain globally. But that market is going to expand a lot, and we want to position ourselves in the right place with the right infrastructure to build into that market. And last but not the least, there's a phenomenal opportunity set in this intersection between payments and stablecoins. So that's an area that we want to focus on as well in the short term.
Expanding on that point, specifically regarding stablecoins, last week on Capitol Hill, it was dubbed Crypto Week, where the House passed 3 crypto-related bills. One of them, the Genius Act stablecoin regulation bill, became law when the president signed it late Friday afternoon. What was your reaction to that milestone, and what does it mean for OKX U.S.? What will change for your crypto exchange?
What a phenomenal week it was last week. A very consequential week for all of us in the crypto industry. And we're now certain that we are at a tipping point when it comes to more and more financial products getting onto public blockchains. So it's a very important week for the larger financial services segment as well. We're looking closely at the Genius Act especially, right, as well as the Clarity Act, which impacts the exchange a bit more. But as far as the Genius Act is concerned, I think we are looking at a market cap of around $235 billion right now as far as stablecoins are concerned. That is, if with the right kind of tailwinds behind, that could grow to a $2 trillion market by 2028. So, we, as I mentioned before, we have this partnership with Circle, we have this partnership with the US Dollar Network. These are all consequential partnerships that allow us to distribute these products to over 70 million customers in over 180 countries around the world, where they can actually convert one-to-one from either USDC or USDG into US dollars.
Let's focus on that announcement earlier this month, the partnership between Circle and OKX U.S. I understand one of the goals is to deepen liquidity for a USD to USDC conversion and vice versa. Can you expand on that? What else prompted this partnership to come about?
Yes. So when you look at stablecoins is part of the core infrastructure of building and running an exchange and servicing our customers around the world. Like I said, we have around 70 million customers across 180 different countries. So we have to make sure that we service them in the right way, in the best possible manner, with the right kind of partners behind us. As far as USDC is concerned, we have this partnership right now, which allows people trading on the exchange to convert between USDC and US dollar without any fee. And we are one of the few exchanges that allows that to happen, which is a good thing. And as far as the USDG network is concerned, that again is a key stablecoin and an important partnership that we have right now. And we are hoping that that'll grow from strength to strength as well.
Now, you mentioned the Clarity Act. Coinbase, another crypto exchange, said their focus is the Clarity Act. In fact, they launched a six-figure campaign 2 weeks ago to get Congress to vote yes for this crypto market structure bill. Why do you think the Clarity Act is important for crypto exchanges like yours and Coinbase? And what will it do if, in fact, that becomes law? What will change?
A lot. It provides the right kind of guardrails for crypto exchanges and the larger digital asset market to function properly, right? It is a consequential bill. If you look back, it was to around a year ago. The crypto industry was in doldrums, right? We were in this regulatory purgatory, so to say, right? And fast forward to last week, we've seen great momentum with all those three bills, the Clarity Act, the Genius Act, and the Anti-CBDC Surveillance Act, all passing through the House, which is a phenomenal achievement. It comes to show that, when you change the way you look at things, the things you look at change, right? In a sense, we've seen a change in perspectives, a change in the way legislators and members of Congress actually look at digital assets as such and look to see how the U.S. can play a leadership role here. And that's very important. What is consequential in the passage of these bills through the House is that, it passed with a pretty large bipartisan majority. So it shows that change in thinking, that change in perspective has happened. And I think it provides the right tailwinds, the right momentum for this industry to progress and for the U.S. to play a leadership role in this.
Roshan also discusses crypto prices and whether he thinks Bitcoin will surpass its new all-time high reached earlier this month. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.